Good morning and welcome to Trader Talk Radio UK, the Daybreak Europe. So let's get down to some analysis of the FTSE 100, which is about to open in around about 5 minutes' time. I wonder whether we need a long. I think we might need to get a long in place here. I've got a couple of shorts in the market, but I don't think this is going to collapse. You know, I was looking at this this
Ascending
RSI.
triangle.
Hello there, mate. How are you doing?
Going all right, bud?
Awesome. Yes, we do have an ascending triangle, and I was looking for this to collapse, but I don't think it's going to. I think with that, the big news of the day obviously is the RBA changing the interest rates and lowering interest rates. The one thing that may keep this caged is the pound. Then I've just saw a headline. I haven't read the review, but the report, sorry, but the headline says that Boris Johnson will have a Brexit deal within 24 hours. It seems like they are pretty heavily pushing now for this Brexit deal. So it could cage the FTSE, but I'm not so sure that's going to happen. So I'm now quite keen to see if I can get into this for a long. I'd like to see the price come back down to the lower end of the pattern, early doors, 8 o'clock this morning, see if it will push down here. And if it pushes down here, then I think maybe we wait 5 minutes, maybe we take it as it goes, but we'll check the price action if it can come down to this point. Check out the price action, see if it holds. If it holds this area, I think we're going to have to take the long. And if I can get at, close to the low, which is where the pivot lies as well. If I can get close enough to the low, that should mean that if it does collapse, then I should be able to take it off. If it starts to move to the upside, it means I can move stops. So it just means that if it does get caged here and comes back down and through, then I should be safe to just protect. So that is the plan currently, mate. I am looking for a long with the FTSE this morning. As I say, I just don't see this one collapsing in the way that I was hoping. It could be a timing issue. That there's the big problem with
timing issue yesterday.
Yeah, and it seems to be sort of filtering through again now. Look at this on a clean chart. Look at yesterday's bar. It does suggest downside, doesn't it?
Yeah, it does.
We're kind of like we're stuck on this this area of potential resistance here.
I mean, at very least, you're expecting retracement of that.
Yeah, absolutely right. I just don't think it's going to come early doors. I mean, it may, and I'm going to be as nimble as I need to be. So actually, given this, I think we are going to have to wait for some confirmation. If it comes back down to the daily pivot, we're going to have to wait for some confirmation of a hold. But I've got to be honest, mate. I don't hold out much hope for this one collapsing to the downside now. So I think I'm going to have to take the long. At least on the short term. Now, if the long, if it doesn't come down here, price doesn't come down here, then I am going to wait. Because if it goes through, then I kind of probably better to wait for the retest rather than trying to hop on board. And that's really down to that daily candle. The daily candle looks a little bit too tenuous for my taste. But I see gold is weakening significantly. And the stocks in Australia have strengthened. S&P futures are up. These are the S&P futures. They're up again. Level of resistance by the looks of things, but that's got a chance of going through there. Do we wait? I mean, I was checking out to see what other news we have today, and the only other thing we have is that there's a few Fed members speaking later on. Does that potentially cage the price action? I'm not so sure. So I'm getting a little bit nervous up here, mate. I've got to be honest. I'm a little bit nervous of these shorts. I don't think the shorts are going to come into play as I'd hoped, because I just don't have a catalyst. I don't know the reason why it's going to collapse here.
Yeah, look, I was a little bit stunned yesterday when the pound broke through, but then bang, it just sucked back really quickly. I don't know if there's anything happened. It just looked like a news candle. and that cost me. I got long pound Aussie, anticipating exactly what happened
Oh,
with the
really?
Aussie.
Yep.
Yeah. But like I said, the timing was wrong, and I didn't have my stop in the right place, and I got stopped and couldn't get back in because it's too close to news. And the rest is history, as
Oh,
we
we'll
now
we'll have
know.
a look at that. That sounds interesting. Well, let's watch the market now. I don't know if it's going to help people. I'm quite happy to put my price levels up. If people ask for me to put my trade levels up, so you can see where the trades are placed, I'm happy to do that. I don't like them on my chart because I like to just look without influence, without being influenced of where my entries were.
Yep.
So let's have a quick look. Now the market's opened up. Now what I really want is it to push down just to see if I can get in. This is not looking like. Well, it's a little bit tetchy this morning. I'm going to watch this on a 5-minute chart here. That's on a 5-minute chart. Actually, no, I'm not. That's too messy. Let's watch this on a let's watch it on an hourly. The 5-minute chart probably won't help. So we need it down here. I don't know whether it's probably best we watch this for a little while, isn't it, mate? I mean, we won't necessarily be a lot of commentary going on, but it's probably best we watch this just for a little while and see if we get the price. So we're looking for a long, and I'm just waiting to see whether when we touch this daily pivot, what the reaction is. I would love to have the chance of seeing the daily pivot, maybe this lower line, and then a reversal bar, and then taking the long. If that doesn't show itself, then I don't know what else I can do. I don't really want to go long, just in case I've missed something. I might, I would take the long here happily on any normal day, but I may have missed something. So just to make sure I haven't missed something, that's why I'm waiting for the bar just to confirm that price holds. Because what I really want, obviously, is for this just to collapse. And it's really not for me to say that the market is going to hold up from one day to the next, because who knows sometimes, but we wait for confirmation to see whether our bias is correct. And I feel like I've got to wait for that. Now, I don't know if you want to do some bits and pieces around the grounds in between
Yeah, I
times,
will,
mate, because
mate. Yep.
it looks like we're probably going to have to wait 10 minutes before this happens. But we're probably gonna need confirmation. If I take the trade before, I will holler.
Okie doke, no dramas.
Now you're a little bit quiet, mate. I don't know whether that's my mic or. That's
I'll
better.
try and talk into the microphone a little bit.
That's better. Much better.
Okay. Yeah, the pickup on these USB mics isn't that great, and you just wind them flat out, and they still don't give you too much. But anyway, that said, I'm going to start with the trade that I took yesterday, and I said I wasn't going to trade, but the setup was just, why is this happening?
Too attractive.
It was because of what I thought was to come, basically, and it was pound Aussie, and we got this sort of price action. I'll use the existing trade line. We got that, and break weekly pivot, retest weekly pivot and daily pivot, and it's a false break of the trend line or trade line. I just couldn't not take that trade, and I said to myself at the time, am I going to take this at a risky proposition, or am I going to be a safe? So I said, no, I like the risk.
Sorry, mate, can you go through that again? I missed when you were saying that because I was watching the price action on the FTSE. So you saw the breakdown.
Okay, so we've had a bull run.
Yeah.
I spoke about this yesterday. Decent retracement. That's all I was looking for.
Yeah.
On the pound crosses, basically got the
because
the
FinViz information gave you that.
Yeah. Gave me that info, and reversal bar here at a reasonable level, and then a break back above the trade line, the daily pivot, the weekly pivot, and then a double cross of the weekly pivot and almost a retest of the daily pivot. I did say at the time that I wanted to see this candle close below the daily pivot, and it didn't. But there you go. I reduced my risk because of that. But it was still a valid entry for me. And this candle took off and looked for all intents and purposes as though we were on the right track.
Oh, I see. Yeah.
Suddenly it sucked back for whatever reason, and decided that the monthly pivot was where it wanted to be. And of course, we've had Aussie news this morning, and that's driven it exactly where I wanted it to be. I wanted to be in this position.
Did you take that before the Aussie news happened?
Yeah, I took this last night.
Right.
Anticipating this move.
Yeah.
But what I should have done was probably pretty much what I've been preaching on pound pairs is use a wide stop. And the obvious wide stop was under here. And I didn't put my stop there. But, the thing was there, if you're going to enter here and you're going to risk 140 pips, is it really worth it? Yeah, it probably is at the end of the day when you're believing that you're going to get a fair run. But I chose the riskier and therefore fatal option of putting my stop certainly underneath the daily pivot and underneath that candle. But as you can now see, that would now be in a very strong position had I chosen the second option rather than the option that I took. I'm back into this, not pound Aussie, but pound Kiwi, which is kind of a de facto, because the Kiwi and the Aussie are very, very buddies in terms of where they move on a daily basis. And this was a bit of a hairy ride as well, because this candle here was the Aussie news. Now, the Kiwi, that just backs up what I said. It moves in concert pretty much with the Aussie. But in this case, I didn't get triggered. I did get triggered in here. Yes, here. Well before the news. And I got a shock, actually. I didn't realise I was triggered in. I got a shock when I came back and watched the news because I was in the trade and sucking down here at the time again. Oh, my goodness, not again. And fortunately, this time I was sensible enough to use the safer option and put my stop, at this stage, out of harm's way. We shall, but there again, have I taken the same? I've done it's exactly the same trade at the end of the day, and really I haven't. I've just snuck it a little bit under the daily pivot, safer than yesterday, but really the safer place would have been under here. But then again, your risk to reward is very lean. I'm really considering closing this trade, not closing it, but moving my stop to entry, because this should have shot through to resistance at this point, and it hasn't done that, which tends to suggest that the pound is still weak and it isn't willing to trade against the weaker currencies, trade along in a major way against the weaker currencies. It's hit minor resistance in daily resistance 1, and I just don't like the look of it anymore. So I am going to move my stop to entry. And if I get taken out, so be it. There may well be a better opportunity down the track. But yeah, I don't like what I'm seeing at the moment. This should have gone through here, very, very well. And that is not the case. Look, I'll hang on for a little bit, just in case we get a retest of this trend.
Do you want me to let you know what the report on the pound is?
Yeah, that'd be good.
So it says here that Boris Johnson is expected to ask the European Union to block a further extension of Article 50 as he unveils his new game-changing Brexit deal within the next 24 hours. The Prime Minister is to outline his alternative to the Irish backstop today, a report claims, with a legal document expected to be sent off to the EU leaders tomorrow. As part of any new agreement, Mr. Johnson is understood to require a pledge that the other 27 members will not permit another delay to the UK's withdrawal. His plan is to force Parliament into a binary decision, either accept his New Deal or allow Britain to crash out with no deal on the 31st. If it goes through, Mr. Johnson will have cancelled out the Benn Act, his hated surrender bill, which he calls it, which was drawn up to prevent a no deal exit. Downing Street will spend Tuesday making calls to the European capitals before delivering a formal text of his terms after his speech at the Tory party conference on Wednesday, the Telegraph is reporting. Those behind the law include Tory rebels. That's not important. The Prime Minister's bold strategy faces brutal hurdles in Brussels amid fears Michel Barnier will immediately try to torpedo his legal text, so effectively ignore it. The Republic of Ireland is wavering on an agreement as ministers prepare to go toe-to-toe with the EU, with insiders telling The Times the Irish expressed concern last night about limited goods checks at the border. If, however, the Prime Minister looks like he will succeed, there is likely to be a clamouring from Remain MPs for the attention of Angela Merkel and Emmanuel Macron, so it looks like they might try and head him off at the pass. Indeed, France, which expressed doubts over the last delay, was reportedly counselled by those behind the Benn Act over its position. Ministers are understood to have warned Mr. Johnson that he will have to seek an Article 50 extension unless he gets a new deal. It's delay or deal, one minister told The Times, while another said it looked unlikely that the Prime Minister could circumvent the law. Senior government sources believe much will hang on whether Merkel comes out fighting for a compromise deal. So, you know, there's a little bit more to it, but that's effectively where we are. And really, reading that, it doesn't suggest actually that that's enough to strengthen the pound, is it? But the only thing is that there might be a deal on the table, but that's about it.
I would have thought if you believe that there's a deal, that it might strengthen the pound.
Yeah, it might do. I think the key with this, though, is that, you know, is he really likely to get European leaders to support not granting an extension, because that kind of puts no deal really front and center. And is that something that every single 27 countries is going to want? Are they really going to support Boris Johnson? They're gonna have to like him a lot to do that, surely.
Yeah.
And I don't know how popular he is within Europe. I think you know, from what I gather, they think he's quite a charming and funny guy. But if they have any sense that we have in the UK, or some people have in the UK, not everybody, then he's also quite dangerous. So I wonder whether that might play a part.
Maybe
well, it's not so much that he's a buffoon. It's just
no, that may be their perception of him.
Well, do you know what? From what I gather, they are not. They're not fooled by the buffoonery at all. I think that they understand that that's just, you know, an aspect of his personality. But he's not the only one, you know, that runs government. You know, namely Dominic Cummings. But I tell you what, I tend to, when I go into deciding who I'm going to vote for in an election, I tend to go with the Chancellor rather than the PM, because I think, you know, it's the Chancellor that really kind of dictates the state of well-being in the country, you know, economic well-being in the country. And his Chancellor he's awful. He's a terrible character. Not terrible in the way that he's a nasty man by any stretch, but he's just so drab. You know, he doesn't say, and it's not drab because he's an accountant, because the last guy was quite drab, but this guy just seems to be a little bit shoehorned into a role that he's not equipped for. So
you get rid of that.
Yeah, well, I suppose you have to, don't you? Because you know, not everybody can do that. It's a very, very specific job, isn't it? Being an accountant for the country, effectively.
Very much so.
But I don't think he's got a very good
train for that.
Well, very, very, very good point. I mean, I suppose if you come from some sort of financial background, it helps. Obviously, these MPs have all had you know, jobs previously.
You and I have got financial backgrounds. I wouldn't like the job.
Yeah, but it's kind of loose, isn't it, for us?
Yeah, it's not quite the same thing, is it?
No, I mean, it's interesting actually. I was just to digress a little bit. I was out on the weekend and I was talking to an accountant, And you know, somebody said to me, "Oh God, that must have been a boring conversation." And I said, "You know what? Nobody's boring. You just have to kind of get in amongst what makes them, what makes them tick in a way, and what
Press the right
fascinates them."
buttons. Yeah.
Yeah, and you'll always find common ground, you know. And I was actually talking to him about he doesn't trade stocks, but I was asking him about balance sheet analysis. And we did have a really good conversation about it. And you know, after speaking to him, I realized that his mind is just programmed differently to mine. And that's the point with this, isn't it? You know, you might have somebody put into the position of chancellor, but they actually do need to be a different type of person.
Absolutely. I mean, who can sit in front of a computer dealing with numbers all the time? I mean, I know we do in some degree, but
Yeah,
you know, just putting them into columns and making sure that, oh no, that's
yeah.
boring as batshit, mate. No good to me.
Yeah. Okay, mate. Well, I just to give you a quick rundown of the FTSE. The FTSE is actually closed just below the daily pivot. No entry as yet, so we were right to sit on our hands with this one, and maybe we're right to wait for a decent signal. So I'm still waiting on the FTSE to get some information. It looks like it may be another choppy period while we remain within this pattern, but the pattern's going to explode in one direction or another because it can't remain here forever. It's getting a little bit thin.
Yep. Okay. Well, with this trade, this is actually a breakout, and if price comes back to here, it's no longer a breakout because we've broken out of this range. So I've actually got my first take profit level here. What I'm thinking of doing, and this is a bit of an aggressive move, is to move my stop to here, which is entry, and get rid of TP1 and just let this run.
Yeah, doesn't that pound look pretty good to you, mate? I mean, that's got some, yeah, it's got some quite nice price action going on. I mean, if it's only about this Boris Johnson headline, it seems to be enough. I mean, what's it like against the dollar? Is it doing the same?
Not as much, but it's there.
Okay, so it's not. This isn't necessarily about the pound. It's much more about. Yeah, it looks like it's carving out a. That's pretty good, mate. That's pretty good. Pound looks pretty strong.
It does at the moment. That's true. So that's kind of where I'm at. I think I'll take advantage of this if it does run.
Yeah.
And get rid of my first take profit and move my stop to entry, because if it comes back here, it's wrong. But if it's going to be a breakout, then this could go very well.
I like that, mate. And do you know what? I have to say, if we use the FTSE as a barometer for this, the FTSE is struggling. You know, the FTSE should be flying, actually. I mean, when we consider, like, you know, worldwide headlines, we've had Aussie interest rate cuts, which should support stocks. We've got the S&P 500 holding its ground currently. We've got the Dow Jones, Nasdaq. I haven't checked the Euro stocks yet, but they're all holding ground, and the FTSE is struggling. It's at the lower end of the pattern, and the fact that the pound is going in that direction suggests to me that that today could be a pretty good day with the pound.
Well, mate, they've come out of the blocks in the right fashion, but it's yet to be seen how we get the rest of it. We shall see.
So your stop's now at break even, just near enough.
Yes, but I'm just managing my other account at the moment, and I hit the wrong button and took profit.
Well, all of it?
No, half of it though.
All right.
But yeah, that's not where I wanted to be.
Okay. Well, that's not the worst thing in the world, but it is interesting. I mean, I don't know whether this fills you with any kind of joy whatsoever, or if this makes you feel any easier about it. But you look at this. Look at the FTSE. FTSE's really struggling up here, and it's going to touch that lower level now. If this does go through this point down here, then I'd say it's going to be a bit of a see you later. Look, it's closed under this daily pivot here, so you know, not the best kind of indication of price action. Now, what this does tell me is that I don't need to do anything. I don't need to take the long, because even if I get a reversal bar at this point, it's probably weak enough to at least hold pattern. But if this comes down and goes through, then as a barometer for your pound trade, I'd say that's looking pretty healthy, because gold is doing nothing of the sort. So it's certainly not a worldwide news event. This seems to be about the pound, and currently FTSE traders seem to be covering themselves. So yeah, I'll pass you back the screen, mate. But just wanted to show you that.
Yep, mate. All good. All good. So that's what I've done. Move my stop to entry, and TP1 now no longer exists. So if it does go, happy days, we'll make some money. If not, then no harm done. And if not, if the pound doesn't remain strong, which is completely on the cards, just look at yesterday. As I said, it broke through, but it didn't last very long and came straight back down on pound Aussie, which is now looking quite frustrating, because my cash should still be in the money here, but no, not the case, mate. I'm not hanging around too long today. I've got some other business to do.
Okay.
And I'm just having a look around the place to see what I can find. So euro dollar.
Yeah, what another collapse.
It's just leaking, isn't it?
Yeah, leaking's the word.
Where it goes is now about, or where I say it goes, is about 110 pips away at 107.79, I think was the number that I've chosen.
Is there any hope for a pop?
Absolutely.
Yeah.
But it's getting less and less, I'd have to say. And the reason there's a hope for a pop is because, gee whiz, there's going to be a lot of liquidity at this level. One wouldn't have thought, but the slowness of it going, and the fact that this one didn't pop, makes me think that we are headed lower. I'm not I don't have any confidence now in saying, well, okay, here's the point where it is going to go.
Is there a price point around here that it's likely to could still hold out, or are we done with that?
Oh, I think we're done with it. We seem to be through all of these levels.
Mm-hmm.
And the next level is probably here, but the level I've chosen is this one because it's been both support and resistance, and it's 107.79, as I say. But if you're not in it now, gee, it's going to be tough to get in.
Is there any chance that we could get a start of the month reaction? I mean, this is the other thing that could be driving the FTSE, and the pound actually, where we sort of see the first day of the month actually giving us just a bit more liquidity and volatility starts to pick up. Is there a potential for that?
It's early in the week as well. Everyone's nice and fresh.
Yeah.
There's dollar. I go back to the dollar and I think, it's so unpredictable at the moment. The dollar,
yeah,
and I just don't like to say, yeah, this is going to go anymore, because we're through those support levels. But again, going back to that point, the support levels are also liquidity levels, and if there's any thought from the big guys that 109 is enough, and that's the price they want to buy at, then they're not going to find better liquidity than where they are right now, I wouldn't have thought, because there's just an ideal opportunity to go long here if you've got enough money to sustain it. The price action that we've had over the last 1, 2, 3, 4 days. So
yeah,
mate, it's always possible, but you'd have to be on the side of the bears at the moment, I think.
Yeah, yeah, and no kind of obvious catalyst that might actually turn this around either. I suppose it might be that we're waiting for the channel. Is there a channel? There's a little channel down there, isn't there? And I wonder whether that might be the area that we could find some hope. The channel that you know.
Just looking for my tool. You looking at this one?
Yeah. What does a lower line give us on that? Quite, it's a little bit lower, isn't it?
Yeah, it's not far from here.
No, you're right. What's that price?
That's 107.79, as I said.
107.79. Okay.
Mm-hmm. I mean,
FTSE continues to.
Let's call it 107.80.
Okay.
But that looks pretty cool.
Yeah, 107. Geez, that's going to be ugly, isn't it? When you think we're at 108, so it's another 100 pips.
Yeah, that's what I was saying earlier. So yeah, if you're not in it, it's going to be tough.
Yeah.
But selling rallies, if you get the opportunity, is probably the only thing to do here. I would have thought, especially if it's off a strong level, and that strong level that has been broken is obviously this one here, 109.09. So a little bit of a rally back to there wouldn't hurt, and then look for something to trade with. There's another confluence area there with a trade line, maybe through here, maybe even a little bit tighter than that. You could probably use that one. So resistance trade line, daily pivot, horizontal level. Looks like a reasonable place to look for short for me. If that were to be the case, smaller time frames may give it to us, but we're a long way from there. It's almost a trade up to there. There may be other options on smaller time frames, but I'd prefer that one on a bigger time frame. So that would be my preference. Maybe something for tomorrow morning I'll have a look at, if indeed we're not down around that 107.80 level. So pound we've spoken about.
Yeah, FTSE 100 is just touching that lower part of the pattern now, and the pound it just touched above 1.23 as well, so 1.230. So pound looking pretty good right now, mate.
Yeah, look, I'm not 100% behind the big rally. I'm prepared to take the risk as well. I don't have any risk on it now, but I did yesterday and got hurt. I like the fact that we're coming off a big, strong base, and we're at the bottom of a range, which looks to have a top in this vicinity, somewhere around here. So there's 123.25. There's another 30 odd pips from here. So if this were to give you a higher low, that would be tradable, in my opinion. But yeah, I'll just stick with what I've got for now. I don't think I need to go any further. The Aussie has obviously tumbled on the, not so much on the back of the interest rate announcement. I haven't read the statement, to be fair. I didn't need to, because it can't have been great. The 25%, oh sorry, the 0.25% cut in interest rates, in my opinion, hasn't caused this. In fact, I expected the Aussie to rally if they only cut by 25%. Sorry, 0.25%. That looked to be the case, as a matter of fact, and got through weekly pivot, couldn't get through monthly pivot, and then bang, thanks for coming. That was the result of the statement, I believe, not the interest rate cut, but who cares why? At the end of the day, that's where the Aussie sits. Now, if you look at this chart, you can still see a double bottom sitting here. Perhaps this becomes a triple bottom. Perhaps it smashes through. But if there's a sign of a higher low here, that's kind of going to get me interested again tomorrow. Wow. It's a base and a half, isn't it? It really is. I guess the key thing here is this line. We've broken it. But like yesterday, I can't find where it's come from, which is not great. There it is. It's on a weekly chart. I'll go a little bit wider. I still can't see it. It's that far in back in history, but it is a level, and it now if we get a close below there, in particular, if it takes out these lows, then look out Aussie. Aussie's gone as well. So that's why I'm a little bit confused with dollar strength, and why I'm just a little bit hesitant to say that, okay, the pound's going to be strong against the dollar, because the euro's crashing, the Aussie's crashing, the Kiwi is
gold is crashing.
Yeah, so it's telling me there's still dollar strength around about the place. And if that's the case, if I have a look at Aussie's dollar Swiss rather, dollar yen, yeah, I'm still seeing dollar strength, and that tempers my eagerness to get long or further long the pound. So I'm just going to sit on it, mate, and do nothing about it. Euro pound, on the other hand, may be something you could trade, or pound Aussie is something you could trade, or pound Kiwi, as I am trading, is something you could trade. I think I'd steer clear of pound US dollar at the moment, though.
Yeah, I think that's a fair point. I think we use it as a little bit of a benchmark, but aside from that, I would agree with you.
Yeah, look, I'm happy with the trade I've got, I suppose. Pound Kiwi, and that goes back again to the relative strength, and that's exactly what I'm talking about. If the dollar is going to be strong, then you don't want to be trading the euro, the pound, or the Aussie, or the Kiwi against it at the moment, or any currency against it at the moment. But go to your miners, and the relative strength is going to be your friend there, because it will give you a good indication as to which currency you should be trading against the other, in my humble opinion. But again, the key to it for mine is, don't just say, okay, this one's the strongest, that one's the weakest, and then go bam. Wait for a retracement on that. So wait for them to pull closer together. Then that's the time to be trading.
Yep. I'd agree with that.
Mate, no more trades yet. Pound Kiwi long's the one I'm just going to stick with.
Yeah, it certainly looks at this stage that that there is some, as you say, genuine dollar strength. We got gold pretty weak here. It looks like it's tanking currently to the downside. So looking like it could be a dollar day today.
Well, I can tell you that
dollar's very strong.
Yeah, interesting. I just see our good friend has closed his position on gold.
Jules? He's closed it.
So he's not expecting it to go much further.
Okay.
Interesting. Could be an interesting day.
Yeah. Okay, mate. Well, you've got to get yourself off.
Yeah, mate, I do have to fly. I've got to go and pick my jalopy up. It's been at the mechanics, and
you go get your jalopy, and I'll spend a few minutes with the guys. I probably won't spend too much longer either, unless anybody's got any questions or anything that they want to look at, because I'll do one last bit of analysis with the FTSE. But aside from that, it's going to be a wrap up. As I say. Okay, yeah, sure, Dominic, no problem at all. Okay, you get yourself going, mate, and I'll take the screen back. Mate. And
have a happy everyone. Catch you tomorrow.
I'll see you tomorrow, buddy. Have a good one.
Cheers, mate.
Okay, so dollar strength now. Really, let's have a look at this. So FTSE 100 is caught in this pattern right now. Now, I was thinking that I might have to buy some protection to the upside, because I've got some shorts in the market. But this looks okay, so I'm just going to sit this one out and wait and see if it continues to hold. But it looks like I've got some time to make a decision, so I don't have to do anything just yet. Now, dollar strength is really being expressed through all the charts, maybe except for the pound. We look at gold. So gold is showing us that we are very, very strong. So gold, this is gold. Gold weakness coming into play. So that shows some dollar strength. The euro could go moving to the downside, showing dollar strength. Dollar yen upside, showing dollar strength, and that's a pretty big pop as well to the upside, which shouldn't actually help stocks in many respects. Maybe the dollar strength is not going to be too good for stocks. Aussie dollar downside. So we just got pretty much the whole collection. This is dollar CAD, kind of stationary. So the CAD looks relatively safe to trade against some of the other currencies. This is dollar Swissy again. A pretty strong trend to the upside. So across the board, we are seeing some dollar strength. Yeah, it couldn't it? I don't know. I'm going to come to unit in one moment, Mark. Manufacturing PMI. I don't think it's about that. I've got to say, I don't think it's about that. We'll come to some potential reasons in a moment. FOMC member speaking. What was said here? This would be my question. Let's have a quick look to see, because it looks like that's happened, doesn't it? Unless I've got my times wrong. What's my time here? 7:50. It shouldn't be 7:50. It should be. No, that's no good. It should be on this. 8:35. Let's have a look. Okay, so Monday, Tuesday, we are in. That was on the wrong day. So we have got Governor Lowe speaking at 10:20. Clarida speaking and Bullard speaking. This may be what it's about. Bowman speaking. It's quite a few bits and pieces that are coming out here. ISM manufacturing, maybe, but I would have thought that would more likely. Is it more likely to weaken the dollar? I mean, manufacturing hasn't been the best number. Look at the manufacturing numbers; they've been falling fairly significantly and fairly sharply. So maybe, I mean, it's possible, but I'm not sure I'd be buying into that number. I don't think people would be buying into the dollar on that number. Maybe there's some other some other nervousness out there. No report yet for the FOMC, but we got some other members coming out later on. It could be about this. Is there anything else? I haven't heard or read anything else that would suggest to me that we are in a particularly nervous moment. I mean, I know that there was some talk of the Chinese showing off their military power, but would that be enough? I wonder whether the backlash of Trump and his treason inquiry could have anything to do with it. I just can't put my finger on it, but we are seeing that dollar strength. Now, that's obviously been coming from a few days out as well. It's not like it's just appeared, but we are seeing dollar strength. We're seeing FTSE 100 weakness. Now, I wonder whether the other markets would become weak as well, because with dollar strength, that shouldn't really be too good for the FTSE. But with gold, now I'm going to use the Head and Shoulders measured move on gold and see if the run might well be done. Now, when we look at this gold chart, I'm going to try and extrapolate exactly where this lives. Not easy. Now, let's see if this is done or not. That looks like it could be, but if we went conservative, there's two potential areas that this is going to be. It's either there, which still gives it some room to the downside. So dollar strength at this, according to this particular chart, looks like it's going to be to this point here, so 1446. So there's still some room to the downside with gold. If it was the more aggressive measured move, then it takes us down to 1431. So we are seeing some dollar strength in the market. We're seeing some gold, some pound strength as well. So the pound looks all right now. Now that might be down to the announcement that that Boris Johnson is making his calls to the European leaders to try and get a deal. So that's in play. Now, Mark, so you're looking for confirmation on what time frame I would see for contrary bar if using the 15 for a bounce. Obviously, trend lines as well to maybe higher highs or higher low. You might have to come back and explain that just a little bit further, just while you're thinking about, because I don't really understand what you mean. So, can you tell me the chart that we're looking for confirmation, just so I've got something to pinpoint. Now, can I just make one point about the FTSE? When I woke up this morning, I was of the opinion that now I've got some shorts in the FTSE. Okay, I've got 2 shorts sitting in the FTSE. If I can bring it up, I'll show you where those shorts are. Let me bring up my just so you can see where the shorts are. I'm not going to leave them up because I find it quite off-putting. But these are my shorts. Okay, I've got one up here that I took days ago. I took on Thursday, and I got one down here. Now, my opinion is that we're going to end up down here, so I was happy to hold on to both of those shorts. But I was thinking when the market opened this morning that we were likely to, I was likely to need some protection because the RBA came out and reduced interest rates, and looks like the deal between America and China is going okay. So I was waiting for a bit of a hold. Let me bring this onto a different chart here. Now I was looking for this first 5-minute bar, then the second 5-minute bar happened. I couldn't enter on that to the upside. I needed it down here. That was an option, but from what I know about the slingshot, I needed it to hold the pivot, and it didn't in the next bar, so it's continued to the downside. Now I'm just going to get rid of these trade lines because I don't really want to look at them. I want to just make my decisions purely off my charts and not off where my trades are. The point was I was wrong. There was an upside. Now I didn't go into the market until I saw some confirmation. The confirmation didn't come, so we are fine. I'm fine to do what I am anticipating on a bigger picture, and see if this market will genuinely start to break down now. But the point is that that sometimes things are unforeseen. So my bias was for upside, but the upside didn't show itself and didn't hold. So I don't know what the reason is. I haven't got a clue. But it doesn't matter as long as I don't overreact. As long as I don't react just on the fact that I think it's going higher. I wait for the charts to confirm it, and when the charts confirm whether I'm right or not, then I can take a trade. Now they haven't confirmed that. So right now I'm struggling and I'm scratching my head. I need to figure out what's going on, because that will ascertain whether I can hold on to this through the pivots if it comes down here, or whether I need to sort of like start thinking, all right, let's lighten up when we come down to here, and maybe try and time the big run to the downside a little bit better, because my timing so far is a little bit off, but it's not a big problem. So yeah, so being wrong isn't an issue. We're just going to wait for confirmation. Now I don't know what's driving this market, and it doesn't sound like anybody in the room has got the absolute answer. I mean, we can all speculate, but we don't know just yet. We need to find out what's going on out here, and unfortunately, I can't talk to you guys and mine for news and data, because it's going to be kind of boring for you. So I will figure it out when I get off air. But let me just talk. So that was just the first thing. The first point I'm making is it's okay to be wrong, but as long as you wait for the correct setup, it's fine to be wrong. It may be that this market still holds, but so far the information is that it's struggling to hold right now. So we can wait for the correct setup. Now, just about to you then, Mark. So you wanted to confirm what I look for in terms of a retracement. So a retracement to me, and I'm quite absolute on this, not absolutely, because it would depend on the strength of the move, but a retracement to me comes back to where it broke from. So there were some pretty nice setups recently on a few of these charts. So let's look at, in fact, gold's not a bad one. Gold did actually retrace. So it's got to, first of all, I need to draw my lines. So my lines on gold is here. So what I need now, what the price I'm looking for is there. Okay, I'm looking for the 1484. So price would have to come back. So now it doesn't have to be on this time frame. This is the key. It's broken out of this this daily pattern. It's broken out of this head and shoulders pattern. It's broken from the neckline. Now, when I come down some of these time frames, now this is the 4 hour. No retracement on the 4 hour. This is the hourly. Didn't really get a retracement on that. This is the 15. This is as good as we got. That's the retracement on the 15. Now, that's the pattern there. It broke through the pattern. It's got to break through the pattern, and then it comes back again. It touches, and then it goes. So that is a retracement there. Now, it doesn't mean that we can take that trade necessarily, because we might want to wait for some confirmation, and that confirmation is going to come from a bar. Let's mark this off. On a shorter term time frame. So let's have a look at the 5 and let's see if we got an entry bar. Yeah, look at that. Engulfing bar there. We'd enter at the low and we're off. So that's the retracement. Now, you may well have entered the green bar, and you know, I have to say I wouldn't have been too adverse to entering the green bar because it didn't manage to get back up above again. But when I look at retracement, I don't want it to go beyond where it broke from. So this is the line it's holding. It breaks the line. So when it returns back, I don't want it to go above the line. I want it to make sure that it stays below the line. And when that happens, it's fine. It's good to go. So that to me is a really good example of a retracement. Now, I think there was another one on the Kiwi Swiss. Let me see if it was the Kiwi Swiss, or it might be the Aussie actually. So it all depends on you know, on the time frame we're looking at. That's no good. All right. In fact, no, this isn't bad. This isn't bad. Now, the Aussie was holding this line. Then all of a sudden it pops up. Now look what happens when it comes back again. This is a retracement. So we'll be looking for the longs in this area, but this bar doesn't hold. So now all bets are off and we're not interested in trading that anymore. It's got to hold this line for me to be interested and call it a retracement that I can genuinely get involved in. So, you know, does that answer the question? And confirming evidence of the hold is one of those patterns that we know. It's a low test bar, it's an engulfing bar, it's a train tracks reversal. It's something that suggests that price has stopped and then reversed. So I'm looking for it to reverse here with a bullish bar. Now that doesn't mean it's got to come off the daily. This is a retracement, that's fine. So then when we come down to the shorter term time frames, do I have, and look what happens. It comes down. In actual fact, this bar here, this one here, is an entry. That's an entry bar, and I would take that. I'd be happy to take that, as long as my due diligence of fundamentals have come into play. So I've taken that to the upside. It comes up, and then this happens. Now, my personal play, if I haven't got a strong belief that this is holding. So if I'm using pure technicals, this bar tells me get out. So now I've not risked a lot of money. So what I've done is I've entered at the high of the bar with a stop at the low of the bar. Price has gone up, all's well and good, and then I get this engulfing bar, and I'm closing the trade with my loss between these 2 points. You know, so I don't risk all this down here. So it's got to follow through and follow through and follow through. If I see a here's another example of a retracement. If we're looking for downside, here's the pattern. Now, the first part is a pattern. I need a pattern. I'm not just looking for trends. I'm looking for a pattern. So now my pattern breaks down here. It retraces. It doesn't get back through again. So I'm good to go for downside. And then it goes. Does that answer the question, Mark? Yeah, no, you don't need it in a higher time frame. So my process and my approach is to find the level on the higher time frame. I want to find my levels on the higher time frame. I want to try and find. So in some respects, you know, if you're an intraday trader or a scalper, if you like, I still believe that if you get on the right side of the swing area, you are in really good shape. Now, it doesn't mean you take less trades, but it means that those trades are really, really sweet. Because if you've got in an area of a swing trade on an intraday chart, you can make a lot of money on trading very few times during the month. Brilliant. So brilliant. Yeah. So now that this has been my approach with the FTSE. So on my FTSE, my chart on my FTSE that I've decided my levels will react from is off a weekly chart. You know, I know my directional bias is downside, and my directional bias is downside for fundamental reasons and for the monthly. You know, the monthly to me on the FTSE looks pretty weak. This looks to me like a diamond pattern. It's pretty scruffy, but I believe it's there, and we know with the diamond pattern, if this was to work out, then it's going to be good night, because the diamond pattern is you know, possibly the most bearish pattern that we're likely to get. And I'm going to draw it for you. Sorry, that was awful. That was badly drawn. You see that? Let me just get rid of this here. Now that's my diamond pattern on the FTSE, on the monthly. Now the diamond pattern is possibly the most dangerous pattern for bulls. You know, it's an awful pattern for the bulls, and I'll tell you the reason why. When this measured move breaks down, this one breaks down big time, because it's going to have all that. Now diamond patterns only really appear on longer term time frames. So you're not looking at this on a 15 or an hourly or anything like that. Can I move this? Oh no, I can't move that. Okay. In that case, I'm going to get rid of that. So I'm just going to bring this on. Here. Now that's my diamond pattern. Now, of course, it might not break down. You know, and the diamond pattern's got a very, it's not very likely to break down. But if it does, and it breaks through here, and we're in at the right area, that suggests 59.31. Now, when you consider we're currently at 73.70, if you took the trade that I suggested yesterday, then you've got a 30 pip stop on your trade. You got in at, I can't remember what prices I gave you guys. Somebody might be able to remind me, but I did suggest a trade was on yesterday. I think it was 74.20 or something. I think you had a 25 pip stop. So you're already in the money. You're already 15 pips in the money. But what we're looking for is it to really break down. Now, if you've got a 30 pip stop, this has got the potential to run 1,300 pips. 1,400 pips in actual fact, and with a potential 30 pip stop. If you were to, it's unlikely that you're going to trade this all the way to the downside, but that is the potential. The diamond pattern may well work out, and if it does, then we want to be on board, right? But my point with this is that I am looking at the big time frame. I'm looking at the as wide as I can get. I'm looking at a primary chart and saying this to me looks like I've got some weakness. Now can I get a really nice pinpoint entry to get into this? Now, the entry I gave you guys was fairly significantly better than the entry I've got. Fairly significantly, not loads, maybe an extra 10 pips. I think I might have given you better off than I've got. On one of my accounts actually got a really nice entry, but the entries I've taken on my personal account not quite as good. They're not too bad, but the second ones it could have been 10 pips better, but it doesn't matter. But so we've got that on the monthly. Now when I go down to my weekly, this is a pattern within a pattern. So the diamond pattern's all part of this. But look at this: left shoulder, head, right shoulder. So now my favorite point to pick this up on, and I've made this point before, and I hope everybody's got it now, is that my favorite point to pick up a head and shoulders is on the right shoulder. That's a left shoulder. There's the head. This is the right shoulder. Now, if I'm picking this up, and there's our neckline down there. So this has got the chance to come all the way down there. And then if the diamond pattern works out, it's got a chance to really go, and go another 1,000 pips or whatever. Unlikely though it may seem, and unlikely though it may be, to hold on that for all that time. And we're actually paying more in swaps than anything else, because it's going to be a long, arduous road. But the point is that we've got a big pattern on this weekly chart. We've got a nice head and shoulders pattern, and not only do we have a head and shoulders pattern, but we might well be at the high of that head and shoulders pattern, because it is the top end of the right shoulder. And the way that I'm going to look for that is that price, now talking about retracement, price is retraced back to where it came from. Here, that's where it was holding. Bang, down, and it's retraced all the way back up again. So at minimum, I would be looking for some weakness here. Whether it makes my big patterns is questionable, because a lot needs to happen for that to really kind of unfold. But it does suggest that at minimum I should get some rejection here. So now I can go down to my shorter term time frames, and all I'm really looking for is a way to get in. Now, I don't need much of an excuse to get in. I just want to get in. I got in here, and it pops to the upside. Now, to be fair, I covered myself by taking a trade to the upside and closing out. And I've got in around here. And I can't remember what I think it was off a 15-minute chart. But it looks now that today it may well give us a better entry. As this kind of it comes down here. If this does start to genuinely break down, it looks like retracement might be the safest point of entry. So it looks like I've been a little bit early. If it breaks down, it still might not break down. But if this does break down, it looks like I may have been a shade early. But no problem. If this makes money, then who cares? But really, when I say I'm a little bit early, the picture wasn't really too clear. Now, I did trade this off a fundamental reason rather than a technical reason, but it's not necessary to do that, and that's not really the way that we are going to find more success. But let me explain to you some of the reasons I took this. Now, some of you did my course. I don't know, Ben. I don't know what's going on. I haven't listened to I can't hear the news right now, but I will find out. Something's going on. You're absolutely right. But I don't know what it is. The S&P is also weakening somewhat. The pound is stable. Gold is tanking. The FTSE starting to come down. The euro starting to tank. So something's going on. That suggests with the euro coming down as that maybe it's something to do with Europe. I don't know, but I will find out in a moment, and I will tell you tomorrow what was driving it. Now, what was I going to say? Now, a technical reason to get in. Now, there was a technical reason to get in. What was it? Oh yeah, technical reason to get in. Now, some of you have got a. Some of you have done my course, and so I'm just going to talk about the RSI because the RSI is a way that I trade. It's a way that I try and get an entry. Now, one of my favorite entries, I try and use two, is the double top area or a break and a retest. what I've got here was a potential for a double top. Okay, when I kind of saw this, that to me was a green light to go for the downside. I got that bar and I was short at the low of that bar. In fact, that's what I suggested everybody do yesterday, if I remember rightly. And that was a fair entry because my RSI was showing this. It's caged, right? And actually, the RSI hasn't broken down, so this move to the downside is not confirmed as yet. But when the RSI is banging its head, then that provides an entry for me. You know, it suggests to me that we've got some sort of price action channel, so I can trade that to the downside. Now, there's also another entry here, which actually might have even been better or more clear. That was our pattern. But look at this. RSI starts to break down, which gives me the entry at this point, and that was the bar, sorry. That was the one there. So that's the way I like to play it. So I did have a technical reason to break down, and it's loose. Don't get me wrong, it's very loose, and everybody gets a little bit confused with when I look at RSI and trade a specific way. But remember, everything I do is an approach rather than a strategy per se. I don't really use a strategy. All I do is eyeball it. I look at the charts and I think that to me looks a bit weak. I want to go short. Give me an excuse. And I'll use an RSI as an excuse. I'll use a 15-minute reversal pattern as an excuse. I'll use a daily bar excuse. Many things can give me an excuse, but it's just an excuse. That's all I'm after. Now, I don't advocate doing that until you've been in the market for a few years, because what ends up happening is that you after you've done it for a while, it just means that, I mean, and it suits me. It suits me to be loose. You know, it suits for my reason to be loose, because if I'm too tight on my reasons to get into a market, then I will end up not trading. Or I end up getting bored and trading really, entries that don't exist. So it suits me to be a bit looser on my reasoning. Don't get me wrong, I'm tight on my reason to go in a direction. I'll always make my kind of my decision on what direction I'm going to go in first. But when it comes down to the entry, that's when I get a little bit loose, and I will use all the different things that I've learned over the years to give me one possible entry. I just need an entry. In your terms, it could be a wave rider entry, or it could be an income creator entry. It could be a slingshot entry. Anything that gets me in the direction that I believe it's going to go in. But my first decision has to be, this is my direction. I'm absolute on that. Now, I've shown you the reason that I'm going short. It's about the monthly chart, it's about the weekly chart, and it's about the fundamental aspect of the current state of play. As a big picture, not what's happening today, but the big picture to me is that we've got China and the Trump administration at war. We've got a potential impeachment. We've got Trump fighting back on that. We've got a potential trade war between Europe and America. So I've got a fundamental reason to look for the short. And then my technical reason is on the longer term timeframes. And when it comes down to the shorter term timeframes, that's just about entry. And that entry for me can be kind of loose. So I hope that kind of gives you an overview. Oh, God, I've gone on a bit too longer than I'd wanted to. I hope that wasn't too much of a of a preaching kind of period. I don't intend to do that. I'm just trying to get let you know my thinking. No, you're welcome, mate. You're welcome. And sometimes, brilliant, mate. Okay, all right. Well, I'll continue to give you what I've got. Now, it doesn't mean that I discard the technicals. It just means that I've used the technical indicators and patterns for so long. I read them a little bit quicker than I used to. And now I'm at a point where I'm sort of like looking and thinking, okay, that's good enough. That's good enough. Because the market just isn't binary, is it? I mean, it's a difficult. This is why the skill, in my opinion, is a difficult one. When you get it, it feels amazing. I have to say, the point that it just kind of went, geez. My first thought was, I'm never going to lose another cent of money again. This is amazing. It felt so good to know that I would never have to lose another cent of my cash. And then the second thing is, I'm going to make a whole bunch of money. That was, obviously that's the thought that comes in after, because we know the markets can provide a lot of money for people if they get this right. But this is the difficult thing about trading, is that you almost have to go through the technical gruel of understanding the indicators, understanding the bars, to understand, and watching the market to figure out when they work and when they don't work, to then come away and go, I can actually play with this a little bit. Because it's when you play with it, in my opinion, it's when you get to that point is when you're going to make money. You will make money by being strict, but I don't know that many people that can be strict. And I suppose that's where it becomes difficult. This is why I say humans will always beat a robot, but it won't if the robot, if the human can't be disciplined. And it doesn't mean that I'm not disciplined because I'm loose. I am disciplined. I still wait, but it just means that I can be a little bit more plastic, and I can be a little bit more malleable about my approach. But you have to go through the technicals, try and really get in amongst them, really understand them. I know this RSI back to front, so I know my indicators really, really well, and it means that I can I can play around with them a little bit and figure out what they're telling me. Okay, so I hope that helps anyway, and we'll be back again tomorrow. So the questions are great, and if you've got anything else, then just ask them. We're kind of here to help, and one thing before I go, I would say is that trading is I think it's very personal. I don't know if any of you have read or seen Harry Potter, but it's a bit like that hat picking which school you go in. Not every single trading approach fits for every single person, and finding your approach is half the battle, and it's not easy to find that. And it sort of, in my way, it just kind of eventually molded. It didn't really kind of appear. It wasn't clear for me for a long, long time, and then all of a sudden it just appeared, and it's like, this is a bit of an epiphany, because I am not special, and I am not particularly I don't excel as a trader. I'm just good at it. I'm just good at it. And all you've got to be is good at it. You don't have to be great. You don't have to excel. You just got to be good. And if you're good, you'll make money. But you don't have to be amazing. You don't have to be the best. But the way you get good is by getting in amongst all the knowledge that you have and really understanding it, and then with that knowledge going, right, let's mix it all up, and which bits are more important to me, and which bits can I use as kind of like soft indicators. And then when you get those kind of things in play, that's my belief anyway, that's when you've really kind of arrived, and that's when you'll really make money. But it will take a while. There's not really any cutting corners. Some people will find it a lot earlier, and some people will find it a little bit later. But the key is, don't give up. And the reason I say that I'm not excellent and I don't excel in it is because I'm trying to tell you that the only thing that made me succeed was not giving up. I just didn't give up until it just, it found me eventually. And it's not because I'm gifted at this stuff at all. It's just that I've done it enough. I've done it a lot. You kick a ball 1,000 times against the wall, you're going to end up being pretty good at kicking that ball against the wall. So just keep at it. Keep at it and trade. I suppose that's the key. Certainly use the ATW accounts because that's what they're there for. Just trade and see if you can learn the indicators as you trade. And losing isn't a problem. It really isn't. Nobody likes losing. I hate it. But it's not a problem as long as you figure out why. It can tell you a lot. All right, guys, I will shoot off, and I will speak to you in the morning. Same trade time, same trade channel as always, 5 to 8. Don't be late, as Jeff would say, and we'll do it all again then. Have a great afternoon. See you later, guys.